Hey everyone, Cameron Lombardi back here with another stock market investing video. Today we're going to be going over some of the trades that I made last week. We closed out of some of the positions that were in the last video, and I'm going to update you on my current trades that we have going on and talk about some earnings coming up here. We have some big earnings in the tech sector that are coming up in the next couple weeks, so we're going to go through those and how we'll be playing that. Before we get into the video, I just want to say thank you so much to all of the subscribers. We just passed over 200 subscribers yesterday. It's awesome to see the channel gaining some traction, and I hope you all are enjoying these videos that we've been putting out. So if you wouldn't mind, hit the like button and let's get straight into the video. All right, guys, so moving down here, the first position we're going to talk about is Bank of America. We currently have a 26.5 strike put that we're selling, and that expires on 7/21. The earnings are coming up on Bank of America before that, so this one we are going to hold through earnings, and the earnings report will be on 7/18 here. I do have 100 shares of Bank of America right now at an average price of $28.08 per share. And we're up on this put sell as well. So we'll continue to hold on to that one. If it does continue to go up this week, it might be worth only a few dollars by the end of the week. And if that's the case, then we'll probably just buy it back. I'm holding off on selling covered calls on Bank of America right now, just in case on earnings it does have a big pop up. I want to be able to hold on to the shares and ride those up, and then once it kind of settles down, we'll continue selling covered calls. So just kind of holding that for right now. Bank of America did have a nice increase in their dividend. It went up to 24 cents per share. The next ex-dividend date will be the beginning of September, so we will probably work our way up to maybe a couple hundred shares by that point and just keep wheeling Bank of America. If you've been watching the previous videos, this is a nice consistent stock to run the wheel strategy and one of my favorites. All right, so let's get into the next position here. We have 112 strike put that we're selling on Google. Google has come down today, and on days that these stocks move down, it's actually better to sell puts. There's more momentum in the downward direction, and the puts are going to be more expensive. So if you're buying a put, you're paying more money for it. If you're selling a put, you're getting paid more money to sell the put. So we went ahead and sold that put for an average credit of $160. It is almost 3 weeks out in expiration, and it is through its earnings date. If we look at Google here, its earnings are coming up on 7/25, and this expires on 7/28. So we are holding through earnings. If it does continue to drop down to around that 112 area where I have the put, I'm happy to own it at that price because Google has been trading comfortably in the low 120s lately. I think it's a great stock to own, and I definitely wouldn't mind owning it at 112 per share. If we do get a little bit of a rally back up before earnings and that price of the put decreases, then I'll probably just sell it and take the risk off the table before earnings. But we'll see how this position plays out. I'm happy either way. And that's what's important with the wheel strategy, guys. You shouldn't be selling puts on stocks that you don't actually want to own and hold. Google is an excellent company in my opinion, and I'm happy to hold on to these shares, and I'm happy to own it at $112 per share. As long as you're comfortable owning the stock at the price that you're selling it, selling puts is a great way to earn passive income on stocks that you want to own at a cheaper price than it's trading for at the current time. In the last video, we had a put that we were selling on Tesla, and we went ahead and bought that put back. You can see here, we bought it for $20. And we had sold that put for $150. So we walked away with a $130 profit in a couple weeks. And Tesla also has its earnings coming up here on 7/19. So right now, we're kind of just watching. We'll see how Tesla does after its earnings. If it comes down, we'll kind of see where the price is at and maybe sell another put on Tesla and just hold on to our few shares that we have through earnings here. The last stock I'm looking at is Amazon. Amazon's also down a good bit today, and I was thinking about selling a put this morning, but we're kind of just watching and seeing how it's going to move here over the next few days. Amazon has its earnings coming up on 7/27, so we'll see if the stock continues to move down. I may sell a put on it as well. Right now, I'm looking through earnings here on the 28th, maybe somewhere around the $114 to $113 range, around where I'm selling the Google put as well. But if Amazon continues to move down here over the next couple days, these puts will become more expensive, and I can probably get paid a little bit more money to sell one of those. But we'll just keep an eye on it. Again, I think owning Amazon or Google well below the 120s is a great price, around that $112, $113 range for both the stocks. They're both great companies to own, especially at that price point. All right, so that is all I have for you guys today. If you guys like the video, be sure to leave a like down below. Leave a comment, let me know any questions that you have. and subscribe to the channel to continue to follow along for more options trading videos just like this one. Have a great week, everyone.